It's more of an if-then situation versus anything else. And it's three three elements, right? But we should be good. So let's get into it. Happy Thursday. Welcome to your discussion for the week. Our discussion this week, Purchase Ready Lab, the purchase and sale contract in the FinCEN area. For those of you who have not had an opportunity to meet before, welcome to Purchase Ready Lab Thursdays. My name is Ray Cole Jackson. I'm a South Florida real estate attorney. A little bit about me personally. If I've not met you before, I am originally from Florida. Miami specifically. For undergrad, I attended the University of Florida. I always like to say that in case there's any Seminoles in the room. I'm far removed from undergrad, but I still believe in the orange and blue and the rivalry that we have. Went on to obtain my law degree from Santa Clara University School of Law in California, where I was the founder of the Real Estate Law Society. Came back home to UM and got my LLM in real property development. So go Canes. I know I got some Canes in the room. I am a proud licensed Florida real estate sales professional. I actually got my first real estate license in California while I was in law school. And I am a proud licensed Florida mortgage loan officer. I got Jessica. I actually became a loan officer before law school and got my license again once I came back to Florida. So I shared that background for those of you who are unfamiliar, just to let you know that we're all things real estate when we come into the lab. Most of you also know that I own and operate a real estate law firm, title company, mortgage team, as well as my husband is a broker and he facilitates all the real estate transactions. So with that being said, there is nothing under the sun that we can have a conversation about as it relates to transactions that we can't talk about, and I mean nothing. All right. All right. With that being said, again, for those of you who are just coming in the room, and we're investors, yes, we are. Go Airbnb and all the things and all the flips. It's funny because literally, Nick just got back from possibly converting a long-term rental to an Airbnb. We're trying to decide. So trying to decide whether we're going to take one of them and convert it to an Airbnb or sell it, honestly. So we'll see. So yes, with that being said, thanks, JR. Literally anything you want to talk about, we can talk about as it relates to real estate. And also, guys, just a little forecast. I'm glad you mentioned that, JR. I do want to, and this is way off topic, but I don't want to forget, and I want you guys to hold me accountable because anytime I tell you that I want to do something, you don't allow me to forget. I want to make sure that we have a conversation about realtors investing in real estate. We have to have a conversation about realtors investing in real estate. We cannot be proponents of the process and not participate in the process. And for all of us, that is our exit strategy. For those of you that follow me on my personal page, and I haven't done it this week because literally, like I was telling Vicious, I was sick, so all that stuff had to wait. But for those of you that follow me on my personal page, you'll see how when we get bookings, I screenshot it and I'll share it in my stories just as a reminder that literally, if I'm teaching right now, I can get a booking, right? And that's we this is what we teach, right? We teach passive income. When I'm asleep, I get bookings. When we're traveling, we get bookings. And so real estate is one of those things, it is a workhorse, right? It is going to work for you 24 hours a day, right? And it's going to work for you in many ways. It's going to build equity, right? It's going to provide you with cash flow, right? And it can even also it can build equity for for future sale, and it can also build equity for you to tap into. So keep me accountable. At some point, very soon, we need to have that conversation. Yeah, we're definitely gonna do that. All right. All right. So back on track. For those of you that are coming into the room, on the screen, grab your handout for today's discussion. Got off on a little tangent right quick, but we're back on track. So navigating the 2026 FinCEN landscape, a playbook for Florida real estate professionals. And here's what we're going to talk about. Again, this should not be a very difficult conversation to be had today. It is just really pulling the veil back for you all into a framework that, as real estate professionals, specifically closing agents, have been complying with for at least the past. gosh, it's been a while. I want to say at least 3 years now, but um, it has not been, I guess, openly shared with the transaction parties. What do I mean by that? What I mean by that is we have always, previous to March 1st, closing agents have had the responsibility of reporting cash transactions by entities in residential transactions in specific areas, right? So they call it targeted areas. And so South Florida was always one. Dade, Broward, Palm Beach County has always been one of those targeted areas. Other areas, such as New York, some areas in California, all of them I don't have committed to memory, but there are specific areas where the federal government was concerned about money laundering. And so there are specific areas within the US where if there was a cash transaction that was completed or closed, you close on a cash transaction on residential property at above a particular price point, $300,000, and the buyer is an entity, not an individual, not flesh and blood, it has been reported. It was always being reported. And again, the parties never knew this, but we were always reporting it. We had to report it. And um, we also were not allowed to let the parties know that it was being reported because it was the government's position that in that case you are thwarting the purpose of the rule. Well, effective March 1st, we've shifted to a nationwide anti-money laundering rule. And that means there's no longer specific targeted areas. This is nationwide, all cash transactions and real estate transactions where the buyer, the purchaser, is an entity, not flesh and blood. It has to be reported. It has to be reported. And not only is it being reported, it's being reported with even more extensive data. And so this was supposed to go into effect, if memory serves me correct, it might have been December. It could have been a couple months even before then of last year. But there were some large bodies, professional, some trade organizations that they fought it. And they fought it for a number of reasons, a number of reasons. But one of the reasons was just the burden of the reporting. Just because again, this is now all cash transactions with an entity buyer. We're in South Florida. How often do we have cash transactions with entity buyers? Very often, very often. And so it just and again now it's no longer has a threshold price, right? And so there were a number of reasons why it was fought in the courts, and finally the courts just they ruled in favor of the government, and then they're allowing this rule to proceed. So where we are today is again, we have this nationwide anti-money laundering oversight that went into effect March 1st. February 27th, Florida Realtors updated our purchase and sale contract to now encompass language that provides disclosures to the buyer and seller regarding FinCEN. So you guys know that in the purchase and sale contract, um, section, I want to say 18 is our disclosure sections. When we go over the standards, when we go over the contract, when I teach you guys the contract, I always teach you the sections. And standards are pretty much disclosure, standard definitions. Here's what you should know. And so now FinCEN is part of here's what you should know. We're going to look at that. It's part of that section. We'll look at it shortly. All right. So defining non-finance transfers. Again, the only thing that you need to know is three elements. One, is it a cash transaction or non-financed? We're going to look at this further, but know that cash transaction does include hard money loans. How commonly do we use hard money loans in South Florida? Very common. That is considered cash for the purposes of FinCEN, particularly because it is not a traditional lender, right? So the first element, is this a cash or hard money loan? What is not, if it's a finance transaction, you're done. You don't even need to go any further, right? If it's a standard mortgage, a bank, lender, you're done. This does not fall into FinCEN, okay? But if it's cash, all right, we've met the first element. Again, I've clarified that under the 2026 rule, hard money loans are classified as non-finance transactions, specifically because they're not financing offered by a traditional lender, right? So if an entity uses hard money to purchase, there will be a filing reporting that transaction, right? So, second element, who's the buyer? Is the buyer a corporation? Um, any entity, estate, association, LLC. Here's a hint. If it's not flesh and blood, you hit the next element. If it's not an individual with a name, social security number, birth date, and those sorts of things, if that's not the person that is entered on the contract as the buyer, you hit the second element. Okay? It's pretty straightforward. So I'm saying, what if it's a trust? Yes. What if it's a association? Yes. What if it's an LLC? Yes. What if it's a corporation? Yes. If it is not flesh and blood, then you've hit the second element, right? Understand that what the purpose of FinCEN, they want to get to an individual person. They need to identify a person. They need to tie this transaction to a person, right? They need to tie it to a person. So they won't, they're trying to avoid money laundering, right? That's a very good question, Peter. We're going to answer that at the end. Don't let me forget, because that's a very good question. So, and then the last element is this a residential transaction? So we know that number one, this mandate is strictly limited to residential real estate transactions. And so that is structures that are designed for occupancy between 1 to 4 families, right? So if it's already built, is it intended for 1 to 4 families? We know that that is the definition of residential property. And then category 2, if it's vacant land that a residential structure is to be built on, that also falls under FinCEN reporting requirements. All right. So 3 elements: cash or hard money, entity, not flesh and blood. 3, residential. If you hit those 3, that transaction needs to be reported. It's going to be reported. It should be reported. Okay. Now, this is the part that is going to frustrate some folks, particularly the buyer. Um, some of you may say, oh, that's not bad. Well, people purchase in entities for a reason, right? Even those who are not who are not laundering money, they purchase in an entity for a reason. Well, now pulling this layer back and them having to report their name, their date of birth. We've never collected a date of birth for a buyer. That's completely irrelevant. Prior to now, in closing, never. Well, now we need a date of birth, their residential address, not your business address, your residential address. What is your citizenship? Yes, this is very sensitive information. And then, of course, their taxpayer identification number, i.e., social security number. Yeah, they want all you they want to know. And again, prior to now, we did not have to report all of this. Again, we never even collected date of birth. We never knew your date of birth. It'll be on your ID, but that was just you could have shown some other form of ID that wouldn't have had your date of birth. But now all of this information must be collected. Now, and the other thing I want to give you guys a little foresight on is this is the document gathering as of right now. This could be expanded if they find that, well, this isn't sufficient for us to police these transactions as we would like. So I foresee them potentially trying to take this even further. There is some information that is reported on the seller. That's not as intrusive. That's information that we can pull from the file, but they may start asking for the seller's date of birth. That's not anything that we collect at closing, right? So again, what you should know this because this documentation pursuant to the The rule, and now pursuant to the contract, it must be provided to the closing agent no later than the business day prior to closing. A good closing agent, the best closing agents, they're going to request this way sooner in their underwriting process. They're going to collect this probably within week one if they are processing their files properly. Okay. Now, what do I mean by that? You guys know I'm very systematic. So I'll give you a little insight into um, our workflow for closings, and it'll help you understand this. Again, because FinCEN has always been a reporting requirement, in our underwriting process, when we take a file in, we have a compliance block. And that compliance block has FIRPTA. You guys know FIRPTA, right? That's FIRPTA, Foreign Investment in Real Property Tax Act. You know that FIRPTA focuses on the seller, right? That FIRPTA compliance checkpoint tells the closer, and the closing coordinator, make sure you have a social or tax ID for every seller. Because if not, now we have to do a withholding for FIRPTA. We've always had a FinCEN compliance check. Because again, FinCEN has been out for a number of years now. This is all in our intake. Intake is what? Week one. And so that's why I said you're going to see, oh, we got some shares, some people scribbling on the screen. Hold on one second. Let's get this off here. All right, how do I stop you from drawing? There you go. All right. FinCEN has always been in our compliance check. And then obviously for those of you who are in South Florida, Miami-Dade County specifically, is the reoccupancy certificate. So any compliance matters that we have to address in closing, they're always addressed in week one. So again, I say that to say the rule and the purchase contract requires that this information be provided at least a day prior to closing. The better closing agents will request this during their intake process, or at the very least during their title underwriting process. Here's why. I do not anticipate that I anticipate that most are going to comply with this information request just fine, but you are going to have some that are going to push back. And those that push back, I want to know this prior to the day before closing, wouldn't you? It's a conversation to be had. We want to know this prior to the day before closing. And so you all, now that you have learned this, you're going to know. Even if the closing agent doesn't wait until the day before, even if the closing agent does wait until the day before closing, you're going to be able to tell your buyer, hey, just so you know, there's a FinCEN reporting requirement that purchasing this property in the name of your business is going to require that we still provide the information, these 5 pieces of information for the individual behind. We call it a beneficial owner. We're still going to have to report this information behind the entity, the individual that's behind the entity, right? And so because you know this and because you represent the buyer, again, foreknowledge is forewarned. So you should be having this conversation. None of you should get to closing and be having a battle about this, right? And this is also important if you represent a seller. This is out of the control of a seller, but a seller should know, okay, well, we have a buyer that's an entity buyer. This will apply. FinCEN will apply to this buyer. They're going to need to provide their personal information, right, to confirm the beneficial owner behind the entity. FinCEN reporting cascade. This will answer your question, Sylvie, probably. So the FinCEN rules have laid out a mechanism of who is responsible for reporting these transactions to FinCEN. So the first person that's primarily responsible, who they're expected going to make this report, is the settlement agent, right? The agent, the person that actually conducts the closing, the person that's going to be responsible for preparing the deed, the settlement statement, recording the transaction, so on and so forth. After that, if there happens to not be a settlement agent, whoever prepares the closing statement. And that makes sense because this is about money laundering. So whoever is responsible for passing this money, they're responsible. That's the next person of interest. If there's not a closing statement for some reason that is prepared in this transaction, the person that's going to file that deed with the recorder's office, they're responsible for reporting it to FinCEN. Notice nowhere in this cascade is the real estate agent. You guys are not responsible for reporting to FinCEN unless you some way, shape, or form take it upon yourself to prepare a settlement statement or prepare the deed and record it in a transaction. Could you do that? Sure. Should you do that? Absolutely not in any situation. All right. Go ahead, Dave. You have a question.
So let's say if there is a multi-member LLC, do all the owners have to report or have their information to the title company?
Whoever is the person that is signing on behalf
Okay,
of the right
okay,
of
gotcha.
the entity. That's a good question. All right. So again, I want to reiterate, generally real estate agents, they're not required to report unless you are performing any of these specific duties. Again, if you're not doing this, you don't have to worry about reporting it. What you must be concerned about is knowing that your client, if your client, again, is an entity buyer on a cash or hard money transaction, they need to be forewarned. Okay. So, paragraph 18, what is it? I subparagraph 3 is where we have our FinCEN language. Um, right? So in there is the deadlines. It says that both parties must provide necessary information, documentation to the closing agent no later than the day before closing. It explicitly requires compliance, and the filing fee is paid by the buyer. There is a fee associated with making this FinCEN filing. I'm gonna tell you guys again one of the reasons why this was fought is because of the the cumbersomeness of making this filing. It's been reported that it could take about 2 hours to file this documentation. And again, that's under the most efficient circumstances. And for that reason, closing agents are going to charge for this. And the fees range. I don't know. Again, I think I've seen upwards of 750, lower end 250. There are third-party vendors that the closing agents can utilize for this filing. So if you see that on a settlement statement, again, now you know what that's about. You'll already know that your transaction falls within the purview of FinCEN filing. So when you see if they line item out FinCEN filing and they name a vendor and they have a fee next to it, now you know what that's for. All right. There will be a fee for that. At the moment, our fee is $250. Through our underwriter, we do have a vendor. If that vendor changes their fee, then our fee will change as well. I can assure you, we will not be spending hours on this. All right. So this is a screenshot of the language added to the contract. And also, I want you guys to note that, remember, and I didn't put this on the screen, but remember how I always teach you guys to confirm the version of the contract? How do we confirm the version of the contract before I say it?
Look at the bottom of the form. It should say the
There
date.
she is. There she is at the bottom. That's right. So we have a new date at the bottom of our contract. It now says revised 2/26 because this was just revised February. So February 26th is our new version of the contract. And so let's go ahead and read it really quickly. Section 1031.320 of Chapter 31 of the Code requires that certain residential real estate transactions without institutional financing, at least one buyer transferee is a legal entity, limited liability corporation, scrolling to go forth. Non-natural person must be reported to the U.S. Treasury Department beginning March 1st, 2026. All right. If a transaction falls under the reporting requirement, then the seller and buyer shall no later than a day prior to closing provide all information and documentation necessary to enable closing agent to complete the filing, right? And so then it goes on to list out the information that's going to be collected. So a question in the chat is, can the buyer contest the level of the charge? Can they contest it? I mean, contest technically, yes. Meaning, can they ask that, for a lesser fee? Sure, they can ask. However, it doesn't mean that the closing agent is going to agree to that, because ultimately, this is a term that you guys should also know. It's called a pass-through, meaning the closing agent is not making any money on that. That's a pass-through. That's what it costs for that. And this is similar to FIRPTA, right? So when, again, I mentioned FIRPTA before, FIRPTA is related to the seller. There is a package that must be put together and submitted to the IRS in a FIRPTA transaction, and there's a fee for that. In yours, matter of fact, let me see if they update. I didn't notice if they update. Let's see if paragraph 9, see if they put that in there. Because we do have charges for FIRPTA at line 141. They did not add FinCEN to section 9B under buyer charges, but it does just say buyer closing services. So that's an umbrella term that could encompass that, but it also specifically says it there in the paragraph. So there you go. All right. All right. So look at. So risk of non-cooperation. Refusing to provide the required information is direct violation of the contract, right? So when the buyer and seller sign that contract, the buyer is agreeing to provide this information to the closing agent at least 1 day prior to closing, right? So it could delay closing, right? If the buyer needs to be educated on this new rule because they were not educated on it in advance, it could potentially create a breach of contract. If the buyer just digs in their heels and says, I'm not telling them who is behind this LLC. Nope, sorry. Forget it. It's that important to me, right? But your buyer has to understand that you don't just cancel and get your money back. Now you are in breach of contract, and the seller is subject to, is allowed to pursue all remedies that are available to them, including retaining the escrow deposit and damages. You guys know that retaining the escrow deposit alone is not the only remedy that a seller has. They can sue a buyer for damages, right? So if a seller can prove that, say for example, they were damaged beyond that escrow deposit, they can sue the buyer for that. Let's say, for example, there was discussions and the seller specifically told the buyer they're keeping the property off the market, and the buyer said, yes, keep it off the market, and no, don't worry about it. And so the seller has lost all these different opportunities, and the buyer ultimately defaults, and they can prove a specific loss, not just a hypothetical, I could have, I should have, but if they could prove specific loss as a result of the buyer's breach, the buyer can be sued for damages beyond that escrow deposit. All right. So again, that's the results of non-compliance with the contract. Now, federal penalties for non-compliance are significant. Fines from $10,000 to $500,000 and criminal imprisonment for 2 to 10 years. So they have heightened the penalties for non-compliance. Closing agents, some astronomical $300 per day, because the filing has to be completed within 30 days, right? So failure to complete the filing within the allotted time period, the closing agent can incur fines for each day that it took them to get that report in. Okay. So I guess at this point, I should tell you that the closing agent is not going to have any pity on you if your buyer just won't cooperate. So this is what the contract requires, and this is also what's required of me. So if your buyer is not going to cooperate, closing agent is not going to close, is not going to twist their arm. They're not, right? It's like either you're going to cooperate or you're not. Okay. All right. So what transactions are exempt? Now that we know what transactions do fall under the FinCEN, the new FinCEN filing rules, and what those penalties are and what the information that must be provided, which ones are exempt? So finance transactions, period. If your buyer is purchasing, is not cash, is not hard money. If it's finance, done. You're done with FinCEN. You don't have to look at that anymore for this transaction. But what about if the transaction, they started off finance and then they pivot to cash? We're back in FinCEN world. Or what if they start off cash and then they pivot to financing? Okay, now we're out of FinCEN world. We have to remember this never goes away, right? Peter asked the question, what about contracts that were executed before 3/1? They still have to report. You're now in the level of information that has to be reported is what it is now. So all those 5 pieces. So even though the contract does not have that language, Peter, I'm glad you asked that question. It still has to be reported. And the closing agent is still going to have to go back and gather that information from the buyer so that it can be properly reported. If it closed prior to March 1st, then they don't have to collect that information. All right. Purchased by individuals, then it doesn't apply, right? Flesh and blood. If there's flesh and blood purchasing, then we're fine. And then lastly, if it's commercial real estate. So if it's 5 or more units, and if it's land that's not intended for residential build purposes, then it does not fall under FinCEN. Okay. Dave say might see a surge in non-QM loans. Oof. And then they might come for that. Don't say that too loud. So what is your role in FinCEN? If you don't have to report it, if you're not going to jail, if you're not going to be fined, what is your role? Well, again, number one, you're checking the first boxes. You need to be educated about it, right? You got to be educated because if it's your buyer, whether you're on the buy side or the seller side, you need to be aware that this is going to be a conversation that's had at closing, right? So you need to be educated and so be prepared to have this conversation with your buyers about the FinCEN filing. Depending upon, I mean, it's better to be safe than sorry. If I was the listing agent and I received an offer from a institutional buyer or entity buyer that's cash, I would mention to the buyer's agent, this is a great offer. Just make sure you've had a conversation with your buyer about the FinCEN reporting requirement. Yeah. And if that agent says, what FinCEN reporting requirement? I don't know, send them to the recording. Because again, you don't want to put your deal at risk. This is similar to FERPTA. I saw somebody mention something in FERPTA. What's a typical fee for FERPTA? You don't recall seeing listed on the closing statement. I want to say like 175, 175. And particularly, and it could be a little bit more, honestly, because FERPTA gets a CPA involved. FERPTA gets a CPA involved. So if that CPA charges, whatever that CPA charges, honestly, is what that fee is going to be, because there's a particular form that has to be completed. All right. So I want to close the loop on this thought. So as I was indicating, if you are a listing agent, you receive an offer from a cash offer from an entity buyer, you want to float out there to the buyer's agent. You've had a conversation with your buyer about FinCEN reporting. Yes. Again, if they don't know what they're talking about, send them to the recording. If they do, great. We've checked that box. At least we've had this conversation. And again, this is similar to FERPTA. This is if you are a listing agent representing a seller who does not have a U.S. tax ID number or social security number. Similar to that, you want to float out potentially or not. You might want to float out to when you get an offer from a buyer, are they willing to sign a FIRPTA affidavit? Why are we asking that? Because we don't want our seller to have to do the FIRPTA withholding, right? If this transaction can be exempt from a FIRPTA withholding, 15% of their purchase price, then we want to do that if we can, right? Someone said, Raycole, what are you talking about? If you don't know about FIRPTA, that's going to be another class. You need to learn about FIRPTA, because if you're representing a seller, and if you're in South Florida, you should definitely know this. If you're representing a seller that does not have a U.S. Social Security number, 15%, unless that transaction is exempt by virtue of your buyer signing a FIRPTA affidavit, 15% of the purchase price, not the proceeds, the purchase price is going to be withheld at closing and sent to the IRS for the seller to have a conversation with the IRS about what their actual tax liability is. Okay, that's FIRPTA in a nutshell. We'll do another training on that later if you don't know about it. All right. So just the second element of your responsibility is just cooperation is key. And again, that's just making sure that if your buyer kicks up and says, this is ridiculous, you support the closing agent and giving clarity to the buyer and saying, yes, this is what's required. All right. All right. So recap. Here's your action plan. You want to make sure that you identify your triggers. Is this a non-finance transaction with an entity or trust and it's residential? Those three elements. Non-financed / hard money, entity or trust, and it's a residential transaction. We're in FinCEN world. If we're in FinCEN world, we need to gather data. Closing agent is going to gather data. The data they're going to gather is the buyer's, the natural person's name, date of birth, their residential address, their citizenship, and then their tax ID number or social security number. All right. All that data must be with the closing agent at least 1 day prior to closing, 1 business day, of course. And again, unless they're asking for it in advance, which I would say they should. The contract specifically says 1 day before, but you don't want to be waiting until the day before. You could potentially, if I were you, and you should, because I'm always thinking ahead. If you get an offer from on a cash hard money buyer, entity trust buyer on your residential property, additional term section, buyer will provide FinCEN reporting data to closing agent within 7 days of the effective date of the contract, or 7 days of opening the file. However, we can tighten that language up. Does that make sense? Because you know that any language that you add to the contract is going to override any language within the body of it. And so we would want to override that. I would not want to wait until the day before closing to know whether or not this buyer is going to cooperate. Because again, you don't know whether or not the closing agent is on their P's and Q's. So there you have it. And then lastly, enforce the contract. Remind the buyer that refusal leads to a breach of contract, loss of escrow. And if by chance the closing agent closes the deal, doesn't report it, there's federal penalties. And you don't want that. All right. Remember, does this rule apply? Again, just another recap. If it's non-financed, transferring entities in the residential property, all these 3 criteria must be met for the transaction to be classified what we call a reportable transfer. A reportable transfer. Okay. Again, these are the 5 pieces of information that are being collected. All right. If you have further questions about FinCEN filing or any other Florida Realtor legal matters, always call the legal hotline, 407-438-1409. You guys should have this number saved in your phone. I tell you guys this all the time whenever it comes up, whenever I recall. I tell you that I know many of you have your favorite attorney, your favorite go-to attorney. You love them and they love you. However, these attorneys, you've paid them to be on call during the hours of, I want to say they're 8:45 to 4:45 or something like that. They're not like 9 to 5, and it's like a 15-minute window. But these guys, they're sitting waiting for your call, right? So you can have your favorite attorney number on your phone, but also have Florida Realtors legal hotline in your phone to call them when you have these questions. Since their name is Rico, you guys call me. I swear you do, but I love it. Any questions? Yes. Me chat. Any questions? Let me see. Yeah, Cynthia, it is. Cynthia, we have a new link. So it's Purchase Ready Lab handout. Purchase Ready Lab handout.com. Purchase Ready Lab handout.com. That's where you get the handout. Any questions? Okay, I saw a question. So I suppose a foreign buyer needs it. If it's an individual, no. If it's an individual, then they won't need a tax ID, even if they're foreign. We won't even be asking for we won't even ask for their social. Customarily, for buyers, we don't ask for their social, we don't ask for their date of birth at closing. Lenders do, closing does not. I had a contract written on Tuesday, we marked the box to be transferred to the. But we got it today just so you can tell everyone we had such a. Oh yeah, definitely. So in the chat, Kathy's mentioning she went under contract with the buyer being an individual. The contract allowed for assignability. The property is located within an association. The buyer did choose to go ahead and assign the contract to an entity. The association, the buyer had previously been approved. The buyer as an individual had been approved by the association. The association is now requiring that the LLC be approved, and that is not uncommon. So yes. The person ultimately responsible for the entity will be, yes, yes, yes. I think we got all the questions. See, I told y'all this one shouldn't be painful. You're welcome, Cynthia. This one should not be painful. All right, we did it. And we did it in and out, 45 minutes. So for those of you, again, I mentioned last week, if you are not receiving text messages, we're working on making sure that our texts, there's updates everywhere, right? So there was an update with text messaging abilities and who can be text and who can and the verbiage that can be in text. And so our whole text thread situation got a little disheveled. And so if you're not receiving text messages, scan the QR code, sign yourself up for text message reminders. You'll get a reminder for when class is starting, any schedule updates. And then again, for those of you that are asking on how to invite to the sessions, you can easily share the link purchasereadylab.com. We'll bring them to the room when we're in the room. For them to register and to get on the email list so that they can get emails and also text messages, then you want to send them to purchasereadylab.com. All right. Last question in the chat. Can a buyer change title to an entity after closing? Sure. They don't care about who holds title. They're concerned about money laundering, right? Once the transaction is documented with an individual, they know how to trace it back to an individual. We just need to see an individual in the chain. All right. Good, guys. All right. Well, that is it. If you did not get the handout, again, make sure you grab the handout, purchasereadylabhandout.com. I think that's all the housekeeping. This is more like to avoid the HOA rule. Oh, well, that's different for the HOA. You got to find out if the HOAs will have an issue with it. That's different. Go ahead, Jaquil.
If you don't mind doing that quick,
Oh, your question.
thank you.
No problem. So Jaquil had a question about rate buy down. And I wish I could, let me see if I can quickly grab a slide on that. Because this is not something that I feel like when I explain it orally, I feel like you need to see it. So a rate buy down, there's different types of rate buy down. There's temporary rate to buy down, permanent rate buy down. And all you're doing is you're paying for the ability to change the effective rate, interest rate of the loan, either temporarily or permanently. So temporarily is for a period of time, and then permanently is for forever, right? And so when you do it, you ask specifically about a temporary rate buy down. Let me see if I can just grab a quick table. I know I have presentation materials, but let me see, temporary rate buy down example table. And then I'll explain it to you. Rate buy down example. If the rate is, if the buyers, okay, here we go. If the buyer's rate is, let me do a share screen. I hope this is even. All right, so high level, and then we're going to use this as an example because I just typed it in. A temporary rate buy down allows the buyer to have a reduced effective interest rate, again, for a particular amount of time. So in this example, let's say for this example says that a temporary rate buy down reduces your mortgage interest rate for the first 1 to 3 years. And again, typically funded by seller concessions to a lower initial payments and a common 2-1 buy down. 2-1 represents it's going to be the interest rate is going to be bought down 2% in year 1, 1% in year 2. If it said 3-2-1, then the rate will be down by 3% in year 1, 2% in year 2, 1% in year 3. Right? So 3-2-1 in this scenario is a 2-1 buy down. This is saying a $400,000 loan at a 6.5% interest rate. So year 1 would be a 2% buy down, which would give them an effective rate of 4.5%. Year 2 would give them a 1% buy down, which would give them an effective rate of 5.5%. That's a rate buy down. Now, the reason why we say effective rate is because when the loan closes, they're going to close at 6.5%. That is their actual loan rate. But what they're going to feel, what they're effectively paying in that first year is going to feel like they're paying 4.5% because that's what their payments are going to equal to because the seller concessions have been taken and placed this in the escrow account to make up that 2%, to make up the rest of their payment. Does that make sense?
It does.
And then in year 2, the rest of the seller concession that's in the escrow account is going to make up a portion of their payment to make that buyer's payment feel like 5.5%. But then by year 3, when this rate buy down was being sold years ago, the strategy is that by year 3, the buyer will be able to take this affect their fixed rate to 4.5% permanently, let's just say. Or maybe 5% if they locked in at 8% when rates were super high. I'm just using that as an example. That was the thought process that we're gonna make this comfortable for you during either a 3-year period or a 2-year period or even a 1-year period. But by the time your actual rate kicks in, either we expect something to change. Either you're going to have a better job, you would have sold a property that's going to increase your cash flow, or we expect rates are going to change so that you can refinance it to a lower rate, right? But that's the whole strategy behind a rate buy down. Again, whether or not that's been successful for many people is still left to be fleshed out because rates didn't necessarily drop as drastically as they were being promoted to during that
And
time.
that was my question, because one of my, I kind of understood it, but one of my other questions was, do they give the customer, just say for instance, what their payments is going to be at each stage? And then number
Yes.
two,
Yes, because you have to qualify.
okay,
Their loan is going to close at whatever rate they qualify for specifically.
okay. And then the other question is, in that promotional or that buy down rate period, if the customer choose to, because the rate just so happened to drop a little bit more, and it drops, just say, for instance, in the second year, lower than what it's going to be in that final year, if they're not thinking ahead, can they refinance or do they
Yes, they
have to
can.
remain in that
No, they can
period
refinance. They
at
can
any point in time?
Yes.
Okay. All right. That was one of the main things that I wasn't sure of, whether or not anytime during that period that they can refinance if the rates change and they're like, yeah, I want to do this 3% for the next 30 years or 28 years or whatever.
Right. As long as there's no just some random outlier requirement that prevents them, then yes, they can.
Okay.
So one thing
Thank
I want to
you.
mention, no, that's a good question. One thing I want to mention, and this only because this came up, um, it'll be applied to their principal. That's a good question, Sylvie. It'll be applied to their principal. And this came up at closing, and this is really a conversation that a loan officer has with buyers. But in case a buyer mentions it to you, and again, I always tell you guys, even though you're not a loan officer, you're in the space, so you should be familiar with this terminology. The buyer asked about their ability to refinance the loan prior to 6 months. I think was the way she phrased it. Is she said I can't refinance this for 6 months, right? And I was like, I wouldn't necessarily say that. I said, I think what you're asking is, she said, my loan officer said I can't refinance this for 6 months. And I said, I think what they're getting at is early payoff, right? So there is a terminology in the lending space called early payoff. And if a buyer pays off a loan within 6 months of origination of closing, either be it by refinance or just paying it off, then that loan officer is penalized and their commission is recaptured. And so with that, loan officers will often coach buyers to not refinance, not pay off, not disturb that loan for at least 6 months. So that's why I said to you, and you're saying they cannot, that's why I said it depends what the loan is, but also there's going to be a conversation, highly likely there's going to be a conversation with them about not doing it within 6 months, even if there is no restriction against it built into the loan. Does that make sense?
Yes, it does.
So again, that's not common, but you, again, like I said, you guys are in the real estate space, so you should know, because she brought it up at closing, like, why did they tell me I couldn't pay it off within 6 months? And I don't know how the conversation went with the loan officer. And I said, well, without looking, at your notes specifically, this is probably what they're referring to. And what they're referring to is an early payoff. They also call it EPO. So if you hear EPO, that's what they're talking about. The loan officer doesn't want their commission disturbed. Derek, anything you want to add to that? Oh, you're muted. You got to find the mute button.
Yeah, absolutely. Yeah, as JR even mentioned that, yeah, a lot of the new developers are using buy down, the 2-1 buy down to get people into the house. Because a lot of sellers don't want to do that because usually the seller pays for that.
Mm-hmm.
And what it usually costs about, if you want to lower, if you want to do like a permanent buy down and you want to lower the rate by a quarter point, it's going to cost you about 1% of the loan amount.
Mm-hmm.
So if you want to drop it an entire point, it's going to cost you a whole 1%, 4% of the
Mhm.
loan amount. So there's a cost involved, and a lot of sellers don't want to pay that. Depends on the market. If it's a seller's market, they don't. If it's a buyer's market, then they might do that to be able to sell the house. So, but a lot of developers is using that to get people in. Um, I had um I had a client come to me and she couldn't qualify. The best she can do was a 6.99 loan. So I'm
Mhm.
dual licensed, I have real estate. So I took it out to a new construction and they got her a 3.99 because they had a buy down. So a lot of the developers they'll do loan buy downs by quantity, by the bulk, in the millions of dollars to be able to buy down those loans to begin with. That way they can offer it to the people to get them into the
Mhm.
houses. So it works. It definitely works. But a seller has to be willing to pay for that.
Right. And we're not, there was a time in the market where you had more of that. Whereas right now you don't see it as much. But like Derek mentioned, when you go to new construction, when you have the inventory and the money and the
Yeah,
closing agent, you get what I'm saying? When you have the entire what we call the flywheel of revenue, you could determine where you're going to pull the money from, and it makes sense to get a deal done. Because when you get a deal done, again, if you have the product, you have the loan product, you have the policy, which is title and closing, then we can pull from different places.
that's
And
correct.
let's talk about if they're doing, warranty or insurance.
Mm-hmm.
There's
Yeah,
a whole vertical. You guys think about the entire vertical that's in the real estate space and how much money circulates in a transaction. You see why it's important to, you know,
absolutely. Yeah,
participate in it. All
yeah.
right. All right.
That's kind of what you do, right?
Oh,
You're
absolutely.
an
One
attorney,
stop
you're a
shop.
closing agent, you're a realtor.
One stop shop. I spin in this chair 360
Exactly.
degrees.
You have your loan license? Are you in LA?
360. Spin
No.
it all the way
Oh,
around.
okay, cool. Good for you. Awesome.
Mhm. Who are you looking for? You said Mark, you mean Derek Janquill?
Yes. I thought you called him Mark.
Derek, drop
Yes.
you drop your contact info in the chat
Okay.
for Janquill. All right. Um, and Jerry makes a good point. I don't know if you guys see in the chat, and this is true. Builders use buy downs rather than discounted prices so they can preserve higher values for future sales prices. That's true. Do you understand what he's saying? Like instead of bringing their sales price down, they will make it more affordable at that price so that future sales they can show a purchase price of 700,000, right? Versus 650 or 600.
Mhm.
All
Yeah.
right. She said I read that on Google. All right. All right, guys, this is great. I think we are, if it's refinance, whatever. If it's refinance, so most times, no. I've seen lenders that they will not hit if it's the same lender, they won't hit them with an EPO. But if it goes to a different lender, um, yes. All right. You're welcome, Sylvie. All right, guys. This has been great. I will see y'all next week, next Thursday. What are we talking about next Thursday? Next Thursday is,
I do have a super important question.
go ahead.
When's our Purchase Ready Lab
I know, I
in-person
know,
lunch
I
meetup?
know.
You
Oh,
know,
God, I
it's gonna
know.
happen. I know that for a fact.
It is gonna happen. These days just come by so fast.
I know that's why we have to plan for it.
I know, Candace. Jeez. I promise you. We got it. We'll get it done. We'll get it done in Q2. Promise.
Okay, it's gonna be amazing too.
Yes, it is, because
It's gonna be like a little mini mastermind.
you're not gonna let it go.
I'm just speaking on behalf of the people, the
I
participants.
know, I know. You're right. You're right. You're right. We're gonna get it done. Next week is compensation agreements. We're gonna try and keep that within 45 minutes. That's gonna be a feat. All right, y'all. This has been great. I'll see y'all next week. Bye.
Thank you so much. Great stuff.
No, you're welcome. Thanks, Derek. See you later.
Bye.
Thanks, paralegal Jessica. See you later.